Securitize has secured $47 million in funding led by BlackRock, helping BlackRock's push into private market tokenization. It's become the largest tokenized treasury fund in less than 2 months since its launch. We'll discuss with Securitize CEO Carlos Domingo. And first off, Carlos, set up your company for us, because you've actually received over $100 million more funding than that. How does it look right now?
Well, we've been doing this tokenization since 2018, and it's been a very long journey to get the technology right, to get the licenses, the regulatory licenses with the SEC, et cetera, to be able to operate. As you said, we've been raising quite a lot of money, but I think this particular project that we're doing with BlackRock, as well as the fundraise, is very significant because there's going to be the largest tokenized fund in history, also the fastest growing, as you said, in less than 2 months. Became the largest one, and also the fact that it's issued by the largest asset manager that has also become a shareholder and a board member of the company is a very important step in our journey. How
is the demand looking for the fund right now? How quickly is it growing, and how do you see future demand looking?
Well, we just started, so I think this is going to get a lot bigger than it is. And as we spread the word about what the fund is, and we talk to more people, and we onboard more people in the more institutions in the company, et cetera, I think you're going to see this accelerating over time. I think what we've done already is very remarkable, but I think we're just scratching the surface.
So I love the ticker, which is BUIDL, right? BUIDL.
That's correct.
It's fun because it plays on HODL, but this is a serious fund, right? What kind of interest are you seeing? Who's buying it, and what are they using it for?
So I think it's great, by the way, that BlackRock went with the ticker, because, as you say, it's a play on HODL that the crypto people use. So the fact that they're using it as a ticker is great for the crypto community. We're seeing adoption in 3 different directions. One is just basically on-chain treasury management for companies like DAOs, foundations, etc. The second one is building derivative products that a lot of people have been claiming that they tokenize treasuries or tokenize money market funds without having a on-chain access to the underlying, and now they have one. And then the third one is to be able to use it as collateral for trading. Because people, for the most part, they post stable coins, so now they can post something that earns a yield, and that improves their performance. So those are kind of like the 3 different directions we're going with this.
Carlos, what are the regulatory implications here, too? I know that the money part's the fun part, the regulatory part is not as fun to talk about, but if you have an SEC and a CFTC to some degree that have been somewhat critical of certain products that have been in the token space, then why is it so easily allowed at this point for people to be building tokenized assets off of traditional financial services when the crypto universe tokenization is still under scrutiny?
Well, this is a security. There's no dispute about it, right? So I think that the issue the crypto people have is whether the tokens they're issuing are securities or commodities. We obviously assume and admit that this is a security. It's issued by a transfer agent that we own, which is it's a registered transfer agent with the SEC. It's sold through a broker-dealer, which is also SEC regulated. So I don't think that there is any controversy around what we do from a regulatory perspective. It's clearly a security, and it's clearly regulated by SEC, and we follow all the rules of how private securities are being issued and sold.